Hey guys, welcome back to another episode of Unplugged with the Jas Oberoi Group. And today I'm not going to say we have a special guest because we don't.
No.
It's the same guy again and again.
Same people, same faces,
Yeah.
same thing. What else you can expect it if the podcast name is Unplugged with Jas Oberoi? So you will see Jas Oberoi,
Yes.
obviously.
Obviously, yes,
Yes.
sure. But what are we talking about today? We are talking about, and this is going to be a great podcast if you
Yes.
are an investor or just starting out to be an investor. So you want to make sure that you listen to this podcast up until the end because Jazz is going to expose everything that you need to know on how to save money on taxes legally.
You're putting me on a spot.
Yes.
Putting
So you have to
pressure.
make sure this is a really good podcast.
Podcast.
Yes.
Okay.
So we are today talking about taxes. We're talking about corporations. We're talking about corporate structures and why they're important. I want to start with the very basic question. If you're an investor and you're looking to start investing in your first property, what is the very first step you need to do?
Okay. If you are self-employed, especially, this
Yes.
is more for the self-employed over employee. And employee, because they're paying the taxes already there, so it may not going to help them significantly versus a self-employed will be. That person, whatever their operating company is, they have to have another holding company, which is a shareholder of your operating company. That's the first step they have to do it. And then pay themselves minimum amount of money to maintain their lifestyle. If my lifestyle can be maintained for $100,000, my means my mortgage, my groceries, my expenses, household expenses, all those being getting paid by $100,000, and I have made $500,000, I should let that 400 sit in my company, take only $100,000. And I've seen it, many investors coming and professional, very well educated people have coming to me and talking, and they are buying properties under their personal name. What they're doing is, oh, I needed $100,000 for my lifestyle. The another $400,000, I took it out because I have to buy a property.
Oh, God.
No, that's not the right way to do it. Let the money sit there. Have another company, which is a HoldCo company, holding company, is just holding assets, nothing else. Make that company as a shareholder in your operating company. What that helps is, whatever the $400,000 is, you can pay to your HoldCo as an interrelated dividend, and there's no tax on it. Why to pay such a big tax? Is automatically, if you're taking $500,000 under your personal name, you're having almost 50% cap. Why you paying $200,000 close to, give or take? I don't have the numbers, but give or take that amount of tax, you have to pay it.
Yeah. And you, at the end of the day, you don't want to pay any tax
And secondly,
or as little as possible. Sorry.
yes, little as possible.
Yeah.
It is, and it's all legit.
Yeah.
People doing it,
Yeah.
everybody does it, and it's CRA is not something CRA said it. Oh, this is fraud. This is not. If it was a fraud, they would have closed it. They would have catch it. No, it is all legit. You can check with the accountants also, and I've seen it also. Again, it is nothing against the accountants or the lawyers. Oh, my accountant didn't tell it. The problem is because you didn't ask them. They didn't tell you. They will always say, I know it, but you didn't ask.
Yeah.
So if I go to my accountant and say, okay, this is, but Jas, you didn't ask, that's why I didn't tell you. How many things I can tell you? So it is very important as an investor to be informed with all the things, have that information with themselves, and ask questions to the accountant. Somebody watching this video can show it to the accountant and say, hey, does this guy is making sense or not?
Yeah.
And that's how it is going. You have to understand the process and work with the people who have done this time and again. Coming back to this, so once you take out that $400,000,
Wait, let's
Okay.
first break it down, okay? Let's say, guys, you are making $500,000.
Yeah.
You take that money, and you most likely it's going to, because you're self-employed, it's sitting in the company, okay? And if you have a company, you have to pay yourself something, right? So going back to what you said,
Yes.
you're going to pay yourself. Let's say, for example, you need $100,000 to maintain your lifestyle, minimum. If you need less, even better. Okay, you want to use that money and you want to give yourself as personal as a dividend. So then you transfer $100,000.
Yes.
The remaining $400,000. It's great that you want to buy a property. It's great that you want to do some sort of investment with it, but do not move that personally under your personal name. Don't move it there. What you're saying is take that money and put it into a different company that you will call your main holding company.
But yes, one thing you have to add on to it. Remember that main holding company. That company has to be a shareholder, not you as a personal. Like
Yes.
I have Jas Oberoi Real Estate. My company, my shareholder in that company, Jas Oberoi Real Estate, is my HoldCo. Only then you can do that interrelated. That's why it's called interrelated
Yes.
dividends.
So yes, and some of you might have even heard the word intercorporate.
Yes, the same thing. It's the same thing.
Yeah. So essentially, you're one company, and they both are your companies, but that company is going to be the shareholder of your operating company or the money or the company that where you are getting your income as a
Yes.
business, right?
And then what you do is there's two benefits. One is you're saving taxes, obviously. Second benefit is if that money is sitting, let's say that money is sitting in your company from last 2 years, you didn't find a property. What will happen is when the bank sees it, you have such a strong retained earnings in your bank company, you can get a benefit on the mortgage side. They love those companies where it's not only the profit I'm talking about, having the money sitting in your account. $400,000, $500,000 as a retained earnings will help you to qualify for more, especially on the commercial side. If you're buying something for your business, all those like buying an office for yourself, something like that, it helps too.
Yeah. And the main thing we have to remember is personal taxes are much higher than corporate taxes.
Yeah.
Right? So that's the whole point. That's the reason we tell you do not move your money into your personal account. Keep it in the company, right? Because you're only going to be paying the corporate tax. What's corporate tax below $500,000? 11%?
11%.
And more than that is
26%.
Yeah. Okay.
And if you're paying 26%, then your dividend tax is slab is less.
Yes.
You don't pay the same amount of tax on your dividend. So which equalizes if you're paying. But yes, point is the money which is sitting in your bank. Now you wanted to buy a property. The time has come. You found a property. That $400,000 which you have transferred into your HoldCo, open up another HoldCo company which will own that real estate house, whatever you're buying it. It could be residential, it could be commercial, whatever it is. Take that $400,000 and give a loan to that company. That's how you transfer the money. And when the property sells, you take the profit as well as the principal, the loan which you have given $400,000 back to your HoldCo. Because this will work only if you keep buying and selling. If you only ended buying one property for your rest of the life, then honestly, personal name would be better. But this is for the people who are keep rotating the money. Like means I purchased it today. After 5 years, I take out the money, put it back into the company, and the same money, including the profit, I'm going to invest into another company. Another property. This is benefited for them, those people. And majority of the people are like that. They wanted to make the money work for them.
Yeah. They want to invest in as many as possible.
As much as possible.
Yeah.
And seen it again. Many of the people have, and I'm talking about on a daily routine basis. I sit with people who are making millions of dollars, and when I see their corporate, unfortunately, they are not done properly because nobody has educated them, or they didn't have the time to go to the accountant asking the right questions, and they have made mistakes in terms of they have spent so much money on buying real estate, and when they find out that taxes are so high, they feel like, is it even worth for me was to buying this real estate?
Yeah.
Yes, I made a profit, $1 million, but half of my profit is going to go to CRA.
Yeah.
I'm the one who was paying mortgages. I was the one who was saving the down payment. I was the one taking all the stress, maintaining that property. And when the time comes to the profit, CRA is taking half of the cut.
Yeah.
And this is what I'm saying is not a rocket science. A lot of savvy investors are doing it, and I've learned from them. And I'm doing the same way. A lot people who are being in this, who are doing this for a long time, they're doing it. I don't know what's the reason why it is not being openly talk about it. Maybe they didn't want to tell it. But this is the way it is. It's no rocket science. It's a very easy thing.
Yeah. I think people make so many mistakes, and then once they see how much taxes they have to pay, that's when they realize. But by then it's so late. Like I have so many people call me and ask me, hey, like I bought this property. It's on their personal name.
Yeah.
It's paid off.
Especially the parents.
Oh, yeah.
So many times we got the phones from say my dad has purchased it in 70s, the 80s, this property, it is under their personal name. We have to pay a capital gain, which is going to be huge. Is there some way we can avoid it? I said, unfortunately, you cannot.
No. Yeah.
This is how it is.
Yeah.
Like you don't want to repeat the same mistake what parents have done, other people have done it, or your parents have done it, because at that time they were not well informed about this. This is how it could be done.
Yeah. So the first thing if you're an investor, right, especially if you're self-employed, the first thing that you always want to look at is your corporate structure. You want to make sure that your corporate structure is so secure that in the future, when the time comes for you to purchase a property and when the time comes to sell the property, your structure is so strong that you're not going to be paying as many taxes. When you're buying a property, you're going to be saving taxes. In the future, when you're selling a property, you're going to be saving taxes, right? And let's also talk about protection.
Yes.
Right? There's also protection when it comes to purchasing and not under your personal name.
So I have an operating company, means Jas Oberoi Real Estate. something mishappening happens, somebody sues me, all my assets are in operating company, like my house, my other properties are under my operating company, all my personal names, they all gonna get sued. I am my all assets. Whereas if it is my holding company, which is a third identity, if somebody today sue real estate, Jas Oberoi Real Estate, I have no assets. So it's not gonna affect me much. I don't have anything under my personal names. It's not gonna affect me that much. Whereas I've seen people have all the assets under their personal name. Tomorrow, if I pass I have to make my will. It is very easy if it is under my holding company, because the company shares can be transferred to my kids without selling the asset. I'm doing a share transfer. It's called share purchase. They are buying the shares. I'm transferring under their name. If it is under my personal name, that house or real estate, either I have to sell it, the capital gain will trigger at that time, or whenever they sell it, because even when I pass away, it is going to go to the kids. CRA is not going to transfer that property to the kids. They will first evaluate whatever the appraisal comes in, the current market value. They will, on the base of the person who passed away, what his tax return is, they're going to tax it. And which is going to be any property in BC you have purchased it in like 20 years, 30 years ago, 10 years ago, it has doubled. So the taxes are going to be more than 45%. And the kids has to pay it. Unless they don't pay, it is going to go to probate, it goes to foreclosure. The government, the CRA is not going to let that transfer to your name. Mm-hmm. Whereas if it is company and you have a will, I understand everybody thinks, oh, we will make this. It is a need, it's a necessity, the will also. When you're structuring it, whether you have one property, whether you have 10 properties, make sure you have your will in place and have your corporate structure. Sit with a lawyer who can teach you, who can guide you how to do these things. This is very important to do these things, because when nobody knows what is going to happen tomorrow.
Exactly. Even if you have like one property, you should go and do it. Because at the end of the day, like nobody thinks like, oh, they're going to pass away. Nobody does that. But you always have to be prepared for the worst case scenario.
And I have seen it like people saying, oh, this is my first property, I'll do it under my personal name. I said, no. If your starting is wrong, you will end up at a wrong 100%. Place. You have to start it from the day one correctly. Don't think about this is just my one property, I'll do it whatever name it is. I don't think about it. Don't think like that. 10 years ago, I didn't know that I will be buying these many properties. You don't know when the time is going to change, and then you regret, shit, I didn't even think this is going to be serious.
And now I have to pay for all these taxes. Yes. Yeah.
Like 2016, I purchased my first pre-sale. I didn't think at that time. Yeah. What is it? 9 years ago? I didn't know that after 9 years, I will be having, I have a decent amount of properties. Mm-hmm. I'm owning it. I didn't know it. Yeah. That time. Nobody knows when the first time that they start. But everybody, the plan is, it's a long-term plan. Yeah. They wanted to make money from real estate.
Yeah. So make sure your corporate structure is in place.
Yes.
Second, make sure you do have a will, right? Yeah. Even if you just have one property, you still should have a will, right? Those are the two things that I would say people, when they first think of their first property, they always just focus on the down payment. They always focus on the other stuff. But it's like before you even get to that, you should have these two in check. Okay, I understand both of these things. And if you don't understand it, you can always talk to your lawyer, your accountant. And if you're one of our clients, you can also talk to us about it. And we will make sure we, can answer whatever questions you have. And if we can't, we will make sure that you are connected with one of the people in our network that can answer your questions for you.
Yeah, who are accountants and the lawyers. They're professionals.
Exactly.
So they know what they're doing.
Exactly, yeah. And then after that comes the stage where you actually start looking at properties, when you're investing in properties, and we will make sure that you get good properties after that.
Oh, that's 100%. Just needless to say that I always say to my clients also that I'm not going to sell you something which I won't buy myself.
100%.
If I have the money and I can buy it, only those are the properties which I'm going to send it. And that's what they value so far. They answer my phone. I know they're busy businessmen. They don't have a time. But when I call them, at least if they don't answer, they return it, because they know Jas is calling it for a reason. Yeah. And if he has told it, this is a property, look at it. There's a good property. There's a good property. Yeah. That's what we have wanted.
Yeah. And I think our company's approach to business is so different as well, in the sense that we have never, and I've worked with you for the past 5 years, we've never treated this like sales. We've never looked at it like we need to do a sale. We've always looked into it, okay, how do we do the complete package for the clients, right? Whether that's when a client walks in, making sure, of course, real estate, that's a given. Every single realtor can give them the real estate experience, right? Of course, we're going to find you a good property, negotiate on your behalf, do everything, right? And we do all of that, sure. But more than that too, making sure that you're not going to be buying under the wrong structure. You're not going to be buying the wrong, the way, even paying your taxes, like all those things. Like we need to make sure that everything is taken care of, because this is not like a one-time sale for us.
100%. And what I was going to add to on it, consider it like a white glove service we give it to our clients. Is give you an example, and this is many of the clients have done the same thing. Is they purchase the property, now the completion is coming, or even after the completion, the lawyers, accountants, because this is a regular process. Rental management company have questions back and forth. If not all of my clients, 9 out of 10 clients just forward me the email without even saying it what to do. I read through the emails and respond it. I'm not doing a favor to them. I'm providing a service to them. What Maria said it, our job is, and I find it, Maria, when I become a realtor here, this is such a big gap in it. Industry is. We are the ones who are finding the properties. This is the biggest asset for anybody to buy. Real estate is. And why there's such a big communication gap in there? Why, as a realtor, not talking to a lawyer, lawyer is not talking to the accountant is not talking to the mortgage broker?
Because I'll tell you why. Everybody thinks the client, if let's say Emmanuel's the client, okay? Yeah. He's in the middle. So it's Emmanuel's job to make sure he talks to his accountant, his lawyer, his mortgage broker, his realtor, his financial planner, everybody. Emmanuel needs to make sure he talks to everybody. But what we are doing is so different, is that we're saying, Emmanuel, you're busy at your work, you're making your own money. You don't need to do that. You put us in contact with your people, and if you don't have your people, we have people. Yes. And we'll make sure that things get done. As simple as that, right? Like when your clients are forwarding you like the emails, like, hey, like take care of this. They know the Jas is going to do it as if it's his own property.
Agree.
He's going to trade
my goal is I wanted Emmanuel to make money.
Yeah.
Because if Emmanuel is not going to make money, I'm not going to make money. So I'm not doing there are no free lunches. They are buying big assets through me, and I can give this amount of service to them, at least because I know it. I've done it many times. Every day I'm learning too. I can, from my personal experience, can answer some of the emails without even talking to the accountant, to the lawyers, how the structure is going to be. When we do share purchases versus asset purchase, especially when we're buying, these guys buying $10 million property, $15 million, to save the property transfer tax, buying share purchases. There's a lot of questions needs to be asked, and I agree, no normal person won't know it. And by the time lawyer answers, accountant answers, is time sensitive. Sometimes we have to make a decision, and I just reply to it.
Yeah.
Like yesterday we were at Winton, where was it? The email came to me, Jas, can you just read it and reply? So I said, okay. So I have to go through the whole thread of the email. There was like 15 emails between accountant and lawyers happening it. So I have to pitch in and saying, okay, this is what we need. Guys, this is the document. This is how we do it. It's just
I don't know if I should say this on camera, but there was another deal where Jas was calling the lawyer, telling the lawyer how to do their job.
No.
Should I not?
That. We are
telling,
not saying that.
No, okay. You can cut this part then.
Yes, we are not saying
calling
that.
all the professionals, and by the way, they're not our network, they're other people's network, but telling them like, this is how you can make sure our client is protected. This is how you're supposed to do this. This is how you're supposed to do that. Yes. Like teaching the professionals. And I was joking with him, like, Jas, you should charge them a fee for doing their job. Like, how is this, this lawyer is asking Jas, can I do this? And Jas is like, yes, like you should be doing this to make sure the client is protected. Then telling the accountant, make sure this is structured this way, so they're doing it. So at the end of the day, they all get their fees, but in the middle, it's you telling all of them. Like,
because I feel always been, and this is the reason, is my business is also flourishing right now, is I feel like get the job done and think about the client rather than having my personal agendas or egos. Like, why should I talk to?
Yeah, why should I do? I'm not getting paid for this.
I'm not getting paid for this. I'm getting paid only for the property to be sold or to be purchased. That's it.
Yeah.
That is my job. No, my job is to make Emmanuel money.
Yeah.
And whatever is there, I'm going to make sure I cover that as much as I know.
Yes. Like, and more than that too, like our focus has always been not one property, but a portfolio. We want our clients to buy 10 properties, not one.
So many repetitive clients are coming in back in the baby.
We have some
how
clients.
I talk to my clients, so like I joke with them. I build relationships with them as a friends.
Yeah. But also because of that, I don't, have we mentioned this in any of our podcasts? I don't think so. We are the number one commercial team in all of Western Canada.
Yes.
As of, we're in May 2025. Yeah, in all of Western Canada. So that's BC, Manitoba, as well as Alberta.
This was I say that one of the ambitions I have it, or dream I had it, that one day I wanted to be number one. I've been on top 5, two also. I was probably last year. I was this close. But one day I wanted to be number one. And this is all thanks to my client in this market, they are trusting me. They're showing the confidence and they're buying the properties. And when I'm telling the properties they're buying it, they are not cheap properties they're buying it.
Yes.
Minimum price would be like 5 million average, 10 million, 15 million.
Yeah.
And we're doing it rotation wise. It
Consistently,
is
yeah.
because the trust has been built.
Yeah.
They're trusting me and I will never break their
Yeah,
trust.
and if you're a client watching this, Jas is throwing a yacht party for you guys.
Yes.
It's in the works to just to
Yes.
thank you
We're
for
doing it in
making
July.
for making us number one.
Number one.
Yes.
I'm taking all my clients who have made me number one in that yacht party.
Yeah.
Yeah, celebrated.
Yeah.
Because it's a time to celebrate.
It is
I
a
feel
time to
like
celebrate.
yes.
Yeah.
And they have done it. Whatever they have, I am today is because of them.
Yes.
So that's what it is.
Yep. Well, that's it for today's episode. Thank you so
Yes.
much for watching, you guys. Make sure you do follow us on all of our social media. And if you're somebody watching with an inspiring story, we would love to hear from you. Please do reach out to us, and we would love to have you as a guest on our podcast. Or if you know someone that would be a great guest, we would love to hear from them. Until then, thank you so much for watching. Have a good day.
Take care,
Bye.
guys. Bye bye.